You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 2 days before Thanksgiving. Have you been out to the supermarket? Can you believe the prices? Well, my next guest is not surprised at all. Neither am I. Carl Gould. Carl, it's great to talk to you. So, cost of Thanksgiving dinner up 26% in 2022, and that's assuming you don't eat steak and you just eat turkey, right?
Well, sure. If you're going, well, it's Thanksgiving. We got to go for turkey, even if we like steak today. It's a turkey day, right, Kerry? So that we'll definitely be buying our turkey. Yeah, the average cost of a Thanksgiving meal is typically around $53. That is up, anywhere depending on where you shop and where you buy, 10 to 17%, and depending on what you're looking for the day. So yeah, it's definitely sharply on the rise.
All right. And you know what I like about the Thanksgiving dinner index, inflation index? It's one that they don't lie about. You don't have some guys in Washington putting it through this magical black box that says, well, you bought an Apple iPad with the new processor. Even though it cost you 10% more, it's 3 times better. So you actually saved money, right?
Right. Yeah. There's no messing with the formula. We for the last couple hundred years, we have the same thing for Thanksgiving: turkey, mashed potatoes, stuffing, cranberry sauce with some gravy. Right. It's the same ingredients every single time, and there's certain traditions you don't want to play with, and this one is a very American tradition.
Yeah. So it never changes. You always eat the same stuff, and they always use the same number of people. But I have a feeling pretty soon they're not going to like this index, and they'll start figuring out what the cost of a family of 8 dwarfs would eat.
Yeah, when it's in someone's interest for that index to change, then look out. All of a sudden, the formula will change. But but certainly, people are really feeling the pinch. I mean, the average family income is around $70,000. With inflation anywhere from 7 to 10% all throughout the course of this year, that means anywhere from $4,900 up to $7,000 that you thought you were going to have to spend isn't there. And it's coming into the holidays. That's tough because this is the time of year that we not only give thanks, but we like to be generous with our friends and family. And you're going to have to get really creative in order to do that this year.
Yeah, and then pretty soon, 4 months after, you'll be giving thanks to the IRS, right?
Yeah, there's no doubt. You'll get the good news as to what your taxes look like. There is a little bit of hope, though. If Costco and Walmart are rolling back some of their Thanksgiving prices, so you can spend under $40 at both stores to get a meal for 4. At their stores. So there is some glimmer of hope. There are some retailers that are rolling back their prices to pre-pandemic levels for the Thanksgiving meal. So, if you get creative and you do your research, you should be able to find a retailer that is discounting or doing a promotion for Thanksgiving.
All right. So you can find deals, but look, you can find deals every year. The fact is prices are a lot higher this year.
They are, and it's too bad that we have to look for a deal to find an affordable meal, and we have to do that. But that is what the situation we find ourselves in, and it's going to be this is going to continue right through the spring. So we should expect to have higher than normal prices for the next 3 to 6 months.
Honestly, look, I've studied these economic trends my entire life, Carl, and I've probably got a couple of years on you. When you go into an inflationary cycle, it could last for a decade or two. This has been the history throughout modern economies. For instance, going back to the U.S. in the 60s, 70s, and 80s, it was there for 25 plus years, going back to World War One. World War One, we had it. World War II, the whole campaign. What this country needs is a 5-cent cigar. Cigars had jumped up to 10 cents. So effectively, he was running on an anti-inflationary platform. So this thing could go on quite a bit longer, couldn't it?
It could, because manufacturers and distributors, what they'll do is they'll take advantage of the higher inflationary prices, and they'll be quick to raise the price, but then slow to bring them down. And so for something to linger, as you mentioned, that is a real possibility.
Hey, and remember what Will Rogers said, invest in inflation. It's the only thing going up.
That's a good point. That's a really good point.
Yeah. So how do you invest in inflation? Real estate is one way for sure, but the price of real estate has so inflated, Carl, that it could easily go down now, especially if rents have actually peaked in many areas, many markets, which they appear to have.
They do. So you want to look at the industries that either are low now and on the rise, or are about to correct and then go back on the rise. So real estate will correct. It's going to head downward. And so you may want to wait, stay in cash as it relates to real estate, and look for companies and real estate that's going to hit more closer to a bottom, then invest in it, and then you'll participate in all the up gains. So those are the sorts of things. The things that were really high, very exorbitant, that were a couple of months ago, those are going to come down and they will correct themselves. So the stuff that you were having trouble buying earlier, let those things come down and then wait for them to circle back up. But if you look at supermarkets, grocery stores, e-commerce platforms, those are continuing to rise, and we expect that they will be stabilized, because you need to buy these products and services. So it's the commodities and the consumables that tend to stay strong in recessionary times.
Yes, this is very true, and this is why big business loves inflation. They might make noises that they don't like it, but the fact is big business is a direct beneficiary of this, aren't they?
They are, as is the government. So the government benefits from inflation because it's like they got a pay raise. And when it comes to inflation, if you're an oil company right now, you've raised your price of a gallon of gas, and it's going to stay higher, and they're going to, still cost them about the same, maybe a little bit more, to refine that oil into fuel, but not a tremendous amount. And they will absolutely be the beneficiaries of an inflationary market.
Yeah, and that goes for any commodity companies, et cetera, because many of your costs in business rise much slower than what you're able to pay for it. And then you get these inflationary expectations built into the system. And then so you don't get price resistance, because many times businesses want to increase prices and you can't because there will be a market backlash, meaning that the customers will rebel against you.
Yeah. There's no doubt. I mean, you can only, the Federal Reserve is very, very careful when they are forced to raise their rates, because they don't want to raise it so much that it stalls the economy. They want to slow it down because they have to keep it under control, but they don't want to stall it, because that would be catastrophic for them, and they don't want that. So,
all right. So, what's your prediction for the coming year? More of what we've had pretty much the last year, kind of this sub-growth paradigm where things just really, economy bad, job situation hasn't deteriorated yet, but you can easily see a situation where it will, can't you?
Don't just survive. Thrive. The Financial Survival Network.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project, with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, well, what I think you'll see first is I think you'll see salaries come down first, because during the pandemic, when salaries were on the rise and it was and employees were scarce, employers were overpaying for their key employees and new employees. And we mentioned this a year ago, that you're going to start to see more outsourcing and you're going to see the salaries start to correct, especially when employers bring their employees back to the office. And some of these employees don't want to go back to the office. And so you're going to see a salary correction first before you see an employment correction. I wouldn't anticipate an employment correction for a while, because we're already near record low unemployment level. So I think that's going to stay relatively strong, but I do think you're going to see a slight correction in the salaries.
All right. Well, that could be interesting to see. Costs go up, though, as well, right? I mean, employee costs. So especially now that they're making the poor employees like the ones on Twitter, go back to the office, right? That increases your costs as an employee.
It does. As an employee, it does, because now you have commuting costs and maybe some other costs with daycare, childcare, pet care, those sorts of things. So yeah, but bear in mind, the costs will go up. They were down tremendously during the pandemic. And look, that party's over. There's no more handouts for the government. I mean, it's time to pay back all of the free money that was floating around to get us through the pandemic. And it was only a matter of time. And here we are.
Yeah, here we are. Hey,
yeah.
How do you think the whole Twitter thing fits into this thing that we're seeing here? Not so much the rants and the raves by by all of them, but what do you think the significance is?
Look, to me, this is a case of a business owner wanting something and enforcing it. So, I have an expression that says that the personality of a business will mirror the personality of its leader. And Jack Dorsey, he ran a much more flexible work environment, and Elon Musk is a lot more hardcore. So he's going to demand that. And the employees that don't like that are going to leave. And the employees that are agreeable to it are going to stay. And pretty soon, Elon Musk is going to have his hardcore Tesla and SpaceX culture at Twitter. And, you could call it good, you could call it bad. But to me, this is just one company putting in a set of standards and then sticking to them. That's it. Elon Musk is the owner. He's going to get his way. So I don't think this is significant of any trend. This is just an owner wanting a certain way of work, and he's going to get it.
All right. So here's the question: is that a good thing or is that a bad thing to have these standards?
Well, it's a necessary thing in any business. In other words, we always advise our clients, set the standards first, put the people around those accountability measures that align with those standards. And so that's what he's doing. He said he put in a set of standards. A number of people are going to leave. He's going to say good riddance, goodbye. Now he's going to be very clear about his standards and say who wants in and who wants to play by this set of rules. So it's always good for a company to set its standards and then get a team that aligns with those accountability measures. So any successful company sets standards, has accountability measures, and then finds the team that's willing to work around those parameters. So I think it's a good thing.
So it's his sandbox and he sets the rules, huh?
That's the way it goes. Yeah. And you can choose to work there or not work there.
Right. What do you think of those people who are challenging him on the site, on Twitter and in social media? And then he says, on second thought, you're fired.
Right. So here's, I know this is part of the problem. If I can send out a warning to those who have moved around a lot over the last couple of years, or when faced with a harder work climate than you're used to, and you leave quickly, understand that you're telling your next employer, or you're sending the signal, whether it's true or not, that you may not be the person that will help them when times get tough. And that you're only a fair weather employee. So if I look at somebody who's moved around 3 or 4 times in the last few years, and every time times got tough, they bailed, and I'm trying to build a company, I'm going to be thinking, well, who's going to be there when I really need them? When times get tough, who can I rely on? And is it this person who jumped around and bounced around 4 times during the last 2 years? Or is it somebody who stuck it out?
Yeah.
So I would be careful to those who are publicly and loudly moving around and complaining about the work environment from which they left. You certainly have every right to do it, but you are broadcasting the fact that you might be a fair weather employee and you might not be there during the tough times when the company really needs you.
But look, on the other hand, Carl, every employee out there is a free agent and is entitled to get the most for their labor, for your work, for your skills that you possibly can. So can you blame
100%.
these people? Do you blame these people?
Oh, I can't blame them, but what they might be, and what not at all, but there's a long game here. And so if I'm about to employ somebody who's a free agent who's bounced from 4 teams in the last 2 years, and every time they were offered something higher, they left, I'm going to hesitate to bring that person in, because they're likely to do the same thing to me that they did to the last 4 people they worked for.
Yeah.
So I am going to think twice about that person.
Yeah, I agree with you. But on the other hand, look, I have a close friend, worked for a major airline, was a pilot for 45 years, longest serving pilot in that airline's history. That's a thing of the past now, isn't it?
Yeah, long tenure is something of the past. And, it used to be you stayed at a company your whole career. Then it was 15 years. Then it was 7 years. Now the average tenure of an employee is under 3 years. So, And
I know my kids, they're all getting paid very well. Thank God they're off my payroll. So, and I was the cheapest boss around. So they had to go find work. But in seriousness, they know that unless they move around a bunch, they don't really get paid what they're worth.
That's possible. However, there are strategies if your salary is a negotiated salary, how to interview and ask for what you want in your current workplace. So you can, again, move and get the signing bonus and the initial payment, but you can also negotiate your terms pretty well when you're at a particular job, especially if you're performing well.
Mm-hmm. Yeah, and in the end, let's face it, you're in a high-paid job with a lot of demands. Eventually, you're going to get paid for performance, right? Sure.
And if your employer does not offer performance-based pay or bonuses, then that's not a job you're going to take.
Right. So companies, it's a two-way street, I guess. So.
Oh, for sure.
Yeah.
For sure.
So what do you tell people? Like, if you're just barely making it, you're making enough money to pay your bills, but if inflation keeps going up, what are you going to do? How do you, there's obviously 2 choices: cut costs or increase revenue, just like for companies. What do you advise consulting clients to do here?
Yeah, one of the top strategies in a volatile economy like this, and when we're looking at a recession, is to start bundling services and products together. And so don't just sell them a T-shirt, sell them that T-shirt with a cap, put the rubber band around it, sell the 2 together, give a slight discount. So had they been purchased separately, they would be more, but bundled, they are less, right? When you sell a vacation, sell it with the hotel and the flight and the taxi to the airport. The reason why you do this, and even though if you discount it, you make more money, is you don't have the cost of client acquisition for that second or third or fourth product. So in a volatile economy, bundle products and services, give a little bit of a discount, you'll make more, and it'll be a a perception to the consumer that they're getting a better deal. That's the win-win in an economy like this.
All right. I like it. All right, Carl. I know a lot of you out there are going to want to connect with Carl, find out more about what you're doing. Where's the best place to find you these days, Carl?
So go to my personal website, carl360.com, CARL360.com. Everything and any way to get in touch with me is there in all one place. So check me out on carl360.com.
All right. Excellent. If you've got a question for Carl, shoot me an email, kl@kerrylutz.com. And while you're at the site, financialsurvivalnetwork.com, make sure you sign up for your free newsletter. And Carl, I'm sure we'll be talking to you again real soon. Be well. Happy Thanksgiving and happy holidays. Merry Christmas and Happy New Year.
Happy Thanksgiving and happy holidays to you too, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.